We'll just give a second for the room to populate.
Got it. Yeah. Let me know when to start. Yeah.
Yeah. Good morning, everyone. Welcome to the day one of the Sidoti conference. My name is Ashisha, and I'm an analyst here at Sidoti. With me today, I have Braiin Corporation. It trades under the ticker BRAI, and I'm happy to welcome Nataraj Subramaniam, the CEO of the company. We have about 30 minutes today, including the Q&A. If you have any questions, please submit them at the Q&A section at the bottom of your screen. With that, Nataraj, I can let you take over.
Thank you, Ashi, and good morning, everyone. Thank you for taking the time this morning to, listen to our story. Um, you know, uh, just to begin with, Braiin is a global AI platform company delivering automation and predictive analysis across industry verticals. Currently, precision agriculture, customer experience, and prop tech. We are industry agnostic. To give you a little bit, we have about 800 employees. In agriculture, we use autonomous aerial robots, AI and machine learning based analytics and IoT integration to provide real time insights into crop health, irrigation, soil conditions, pests, yield prediction, and weather risk. In customer experience, we provide end-to-end solution designed to transform how enterprises engage with customers and manage internal teams. In the property technology platform for utility connections, bill comparison, and ongoing household expense management, we've had a robust growth of about 30% year over year over the last 3 years with a long-term revenue visibility through a predominantly recurring revenue model. Um, Now what I do is I'll just, jump on to the agri-tech platform because this is where we started off. Brain's journey started in 2015. To give you a little bit of a background about myself, I grew up in India, graduated from the Air Force Academy, was a fighter pilot in the Indian Air Force for a few years. I had a bachelor's in aeronautical sciences, was very keen on aero modeling, etc. And then flew for about 7.5 years, mainly Russian variants, the MiG-21s and the MiG-27s. And then took an honorable discharge, moved to the US, worked with SAP, the German software company, for a few years. And I started my entrepreneurial journey in 2005. Initially, after SAP, I started a company which was mainly focused on ERP. We had our own product, which was a bolt-on on SAP, and we grew the company to about 35 million in revenue in about 5 years. Had global operations and exited that company in 2011. When you look back at Brain's journey, which started in 2015, initially when you look at drones, you think about the early 2000s when drones were predominantly used post 9/11 to take down terrorists. It had a negative connotation, but around 2009-10 is when the commercial usage of drones came into play. So that kind of piqued my interest because, coming from the same background, aviation and aeronautical sciences, I thought, this would be a good area to explore. So, when drones started coming in, there were a lot of commercial applications. Agriculture was one of them. You had delivery, you had search and rescue operations, oil pipeline inspection, construction, so on and so forth. What made it interesting for me was to kind of go and do a discovery. And I spoke to a bunch of friends who worked for McKinsey, Price Waterhouse, Bain, so on and so forth. And, that kind of showed that the agtech market in the drone space was pretty large, about 33 billion as per the studies that was done. And we said, this could be a good area. And when you look at drones, you're looking at various issues with respect to regulatory issues, security issues, and then you're looking at privacy issues. regulatory issues, with respect to the airspace, etc. So, we had to kind of look at an industry which made more sense to us. And generally, agriculture being in remote areas and not close to the cities made it easier because, it's not just aircrafts flying at 35,000 feet, but you also have helicopters and other operations happening. So we said, let's kind of focus on agriculture. And, agriculture in the emerging markets is pretty old school. When you look at agriculture, in the Western world, mainly US, Canada, Australia, Western Europe, it is, pretty much automated, using John Deere tractors, boom sprayers, and all of the high technology that you can think about. But when you look at the emerging markets, mainly in Africa and Asia, it's done pretty old school. So, because the farmers do not have large holdings and there are certain challenges with respect to infrastructure and the spend is not very high. So we said, why don't we kind of focus on agriculture in the emerging markets, mainly, given that I come from India, even though I've been living here for 25 years, I know a lot about the geography, I know about Sri Lanka. So we said, let's focus on that. And we started, doing some studies. One of the things that we really wanted to focus on was, are we going to be displacing workers when we do automation in agriculture? And when we did the study, we were fascinated with that, mainly because there's a huge population in those parts of the world, and we thought the labor force displacing them would be a challenge. But very similar to the Western world, the younger generation do not want to work on the farms. The average age of the farm workers is anywhere from 55 and above. And, the younger generation obviously are most of them in Africa and Asia, British colonies, they speak English. So they're more educated than their parents. And, they move to the cities and do service jobs and business process outsourcing companies, so on and so forth. So obviously, there was a huge shortage of workers in agriculture. So that made a lot of sense for us to go into automation. And one of the other things was the social impact that we could cause, because when you're looking, people use their hands and, do plucking and tilling. They use 40-pound backpacks on the back and do, manual spraying, and then they inhale those fertilizers. Those tanks leak and they go onto their backs. They're carrying like 40-pound backpacks on the back, which kind of cause problems, and these are gasoline operated. But if you use drones, those are electrically operated, better for the environment. You do not have all these health issues of bronchial asthma, some instances of lung cancer, so on and so forth, inhaling all these pesticides and fertilizers, etc. So that kind of also made a lot of sense from the social impact part of it. So, we decided to kind of expand our operations more in a SaaS model as a service with no CapEx and no OpEx to the clients. One of the most important things for us to focus on was on organized crops, because when you are looking at emerging markets, you don't want to deal with 1 acre, 2 acre farms. You want to deal with larger holdings. And, the crops that we wanted to focus on, which were organized with tea, rubber, oil palm, so on and so forth. And we said, it makes more sense for us to focus on tea initially, because those parts of the world produce tea and they are some of the largest exporters of tea in the world. And it's not a seasonal crop, it grows all the year round. So that means minimum downtime for our drones, etc. So coming to the business model in agriculture, uh, we have three revenue streams. Firstly, we use our drones and satellite imagery. The reason we do both and overlap them is because the satellite imagery covers a larger extent of area, but it's not very high resolution. The drone imagery, when you're flying lower, is very high resolution at about 400 feet. But then, you can't really do much extent of coverage. So, it's good to kind of overlap both these things. And for the, and for the ground, like soil and other things, we need IoTs. So we use, satellite imagery and drone imagery and thousands of them, stitch them together into an orthomosaic, and then run our proprietary algorithms to determine problems related to water, fertilizer, disease, much before you spot it with a naked eye, and provide with actionable intelligence to the farmers. So that is one stream of revenue. The second stream of revenue in that part of the world, you do not have you know, crop dusters, and generally, as I said, backpack spraying is what is done. So we use our drones to actually carry out crop spraying. And for tea, it's very important because even if there were crop dusters, which generally come down to about 75 feet or maybe 50 feet above the crops, that wouldn't work because tea needs to be, fertilizers need to be sprayed, and herbicides and pesticides need to be sprayed from about close to 6 to 8 feet above the crop. So the drones work out really well. So we use our drones to carry out aerial crop spraying on these crops, and it's all year round because different seasons you need different kind of spraying to be done. Either it's foliar, pesticides, herbicides, so on and so forth. And the third stream of revenue is more on the data side because all the contracts that we sign, pretty much we own the data. So, what we do is we use the data and do a lot of predictive modeling and create products for insurance companies and financing companies, right? So, in that part of the world, it's quite challenging for big farm groups also to get financing. So, having predictive modeling, seeing the weather patterns, historical patterns, so on and so forth, and being able to kind of provide financing companies with the comfort, what would be the kind of growth this year, et cetera, helps out. Same thing with insurance products because, we can kind of provide them, how the predictive modeling part helps out a lot. Also because these countries are some of the largest exporters of tea in the world, all these predictive modeling helps them to kind of book the freight liners in advance and saves cost, et cetera. So those are the three streams of revenue. And generally, the holdings that we have are pretty sizable. So we are looking at, holdings which are in each of these are all publicly listed companies, the tea estates that we work with. They are anywhere from about 20,000 to 30,000 acres. So it's much easier for us to kind of deal with a CEO, and not have to deal with individual farmers. We have 5-year long-term contracts, which are about 35.3 million, US dollars. And then we have 110 million in MOUs. These MOUs can be changed to binding contracts. The reason we kind of didn't want to sign these into binding was because initially we wanted to roll out for the 35.3 million. And then, slowly as we expand, we want to kind of stage it accordingly and not kind of overpromise and underdeliver. As you can see, there is significant yield margins, worker safety, erosion, etc. Also, it lowers down the cost, reduces water usage, increases yields by about 20 to 25%. So this is on the agtech side. I'll then kind of get into that. Initially, we were focusing on agtech. And this was in 2020 when we had the challenges of COVID. This is not something like how we do on Zoom calls now. We had to have boots on ground, and we had to have pilots and engineers flying down and doing operations in Sri Lanka and India from Canada, US, France, because they didn't have the skills to do that, and then UK. So when COVID struck, it was a little challenging for us. We had to put a pause button, but we used that to kind of think about, we were in agriculture, we were doing, we had strategically tied up with a company which was doing farm ERP, so we could kind of connect all of them together and provide with, an ease for the tea estates. We were also using, a company which was specializing in providing connectivity, on the fly. One of the reasons is when you go to all these farms, even in the US, in remote areas, you don't have enough cell towers. So The coverage isn't great, so we had to kind of light up the farms quickly to be able to upload the data onto the cloud and process them. So we said, why don't we think about strategically kind of not just working as partners, but getting under one umbrella and merging all these companies together. And at the same time, in 2020, we had a great opportunity to acquire a Gen AI company, which had raised, started in about 2015, raised about 35 million, that built some amazing machine learning algorithms to work on unstructured data, but then went belly up because they were not able to get enough contracts in place, and they had most of their engineers based out of Australia. So we said, why don't we acquire, the technology on cents to the dollar? They had some amazing machine learning algorithms. The patent that they had on one of the machine learning algorithms was instrumental in, two of Shakespeare's anonymous plays being credited to him. So, we said, let's acquire this and, kind of see how we can use this machine learning algorithms on agriculture. And then we said, why restrict ourselves to just one industry vertical? Let us look at other industry verticals where this could be useful. And then, prop tech came into play. So in prop tech, I met up with a very interesting person who had just exited his company to Origin Energy. And what they do is provide AI-powered switching services and connectivity services. This is not very popular in the U.S., but because we still are not very deregulated when it comes to energy. But in Australia, New Zealand, England, all the English-speaking Western countries, it's very popular because these are all highly deregulated industries. They have like 100 energy providers to kind of choose from. So what we basically do, so when he exited to Origin Energy, one of the largest energy companies in Australia, they weren't very interested in the IP and the technology part of it. They just wanted to acquire the company because the comparison services was not very helpful for them. So what it does is, if let us say you are moving from place A to place B, let it be a rental or you've bought in a place, you could just put your zip code where you're moving to, your current zip code, and within 30 seconds, it will populate all the comparisons that you can have. What are the services with respect to, here we have Con Edison pretty dominant, but, there you have like 100 energy providers, which would populate and show you if you move to the zip code, this is your energy usage based on your energy bill, and within 30 seconds, it'll provide you, hey, if you switch to this service based on your usage, et cetera, you could save $17 a month. And you just click the button, choose the date, put the address that you're moving to, and it will automatically switch on that date. So you don't have to get on the phone and call and go through all those tasks. The same thing with broadband, water, county taxes, any utility service that you're thinking about. And, that kind of was a very interesting kind of technology. And they had a huge market share in Australia. And we said, this kind of makes sense for us. And then we acquired that company. And post the acquisition, what is very interesting is we've signed an exclusivity for 4.5 million homes in UK to provide this connecting services and switching services. And when you talk about switching services, and comparison services, you're already at a place. You can always kind of switch to another service with a click of a button to kind of save money. Now, the interesting part in UK is unlike the US, when people move rentals, they don't pay the security deposit to the landlord because they've always had challenges in UK, wherein, when they're moving from, and they're renting out, they have challenges in getting back the security deposit from the landlord with respect to the tenants. So they have, whenever you kind of rent out a place, there is an agency called TDS in UK where you give the security deposit to the government agency. And when your lease finishes, they would carry out an inspection to ensure that you get paid back. And also, the landlord is happy because if you damage the property, the government says that, hey, we need to deduct this much from your security deposit and pay you back. Now, we have an exclusivity to market our services of 4.5 million homes with the TDS that we've signed up. On an average, on a lifetime, which we generally consider for rentals to be 5 years. That is with our experience and research that we've done. You're looking at about £1,000 per home. And in general, in about 12 to 18 months, we would be able to convert about 20% of them. So you're looking at about 900,000 homes at about $1,000 a pop over 5 years. That's pretty significant. And, in annually, you're looking at about 180 million in revenue. So we expect that to be converted in about 12 to 18 months. We've done that service in Australia as well. Australia is about 2.5 times smaller than the UK market. And now we are also doing it in New Zealand. So, with this 4.5 million, we have a huge potential to grow over the next 12 to 18 months, our revenues by about, if not 180 million, you kind of put a 30% discount on it, 100 plus million is what we expect from there. On top of the 35 million on binding contracts that we have in the agricultural space. So that is with respect to that. And then the third vertical is the customer experience as a service. So in the customer experience side, what we do is, we provide, we have IP on a lot of things. We provide a lot of automation to the BPOs. We're doing a lot of agentic AI call centers, taking the human out of the mix. And, that kind of helps with, you know, customer acquisition, engagement, support, retention, so on and so forth. In the intellectual property side, in the customer experience side, we have, speech analytics, which we have our intellectual property on. So to give you an example, let's say, you're calling up Dell, you have some issues with your laptop, you kind of sound a little agitated, your problem is not getting sorted out. You don't, call automatically gets escalated to the supervisor based on your tone, etc. Okay, so that's a very interesting IP that we own. And then on top of it, there's something called efficient call routing. So, during busy periods, let's say during, Thanksgiving sales, so on and so forth. If you are calling up and there is lesser staff on work, etc., it automatically kind of ensures call routing with lesser staff, greater volumes, so on and so forth. So it's a very interesting technology that we have there as well. And then, we've kind of want to kind of provide you a little bit more details on the digital innovation side. And so this is pretty much the three verticals that we are operating in. And coming down to the financials, right? So we've been growing 30% year over year. Our fiscal year ending is June 30th of, from July 1 to June 30th in Australia. So we're an Australian company which did an FPI and listed in the US. Do we have plans to convert it into a domestic company? Yes, in the near future. The immediate reason why we didn't do that is because we follow the IFRS accounting system, and we need to change all this to US GAAP, and it kind of takes a little bit of time. So we want to have a little bit of a breather on that. Another reason is also, since we strongly believe in M&A, both organic growth and inorganic growth. The organic growth part is about 30%, but I think we also have a sizable amount of inorganic growth that we've done, and we have a huge pipeline to do that. It's material non-public information. We can't get into details, but we plan to double our revenues, the 30% growth, plus we also have a huge pipeline to double our revenues, very synergistic in all the three verticals that we're talking about. We are, when you look at it, all these numbers are June 30th. So as of June 30th of the fiscal year ending 2025, you can see the revenues. We are on target to do by June 30th this year about 85 million in revenue. Our adjusted EBITDAs are there for you. So we are a profitable company with an adjusted EBITDA of currently, 2025 at 7.6, heading to 11.3. You see the sizable uptake because of both the M&A part of it as well as the AgTech contracts, which are very high margin. So that is what you see in 2026 fiscal year going to, which is ending June 30th. Um, you know, then here you see our M&A strategy, basically how we kind of look at maximizing it. Now, currently, we are, with all these acquisitions that we have put in place, we are integrating initially the HR and accounting part of it. That would save a sizable amount over the next 6 months. And then we would integrate all the other technology part of it as well, which would take anywhere from 12 to 18 months. So I've covered about myself. We have Jay Stephenson, who's the CFO. He has extensive public company experience. He's been advising companies and has been an independent director in companies for the past 30 years. He's been part of about 60 publicly listed companies in the Australian Stock Exchange. The president and chief operations officer is Neil, who's a person who exited his company to Origin Energy for about 120 million. He brings in a lot of relationships in the prop tech space as well. So with that, I've finished my presentation, okay, and I'll leave it for a Q&A now that, we've already at about 20 minutes plus.
Great. Thank you so much, Natraj, for the presentation. We really appreciate it. I just wanted to understand. You can just stop sharing the screen now. That's okay.
A second.
Yeah, I would like to remind everybody in the audience, if you have any questions, you can submit them at the Q&A section at the bottom of your screen. Can you tell us what the revenue split like right now looks like in between the three categories or sectors that you are invested?
Yeah, happy to do that. We have 50% to 60% of the revenue coming from customer experience, let's say about 50 plus, and the 25 to 30% coming from prop tech and another 20% coming from ag tech. That's the split.
Okay, and do you see that, where do you see the company moving in the next 3 to 5 years? Like, is it going to be more like a platform company or a device company or a data company? Like, how do you see the business evolving in the next 3 to 5 years?
We are mainly a platform AI machine learning company. So, we would continue to do that. We would scale up on these current verticals that we have. We are industry agnostic. And also, if there is any other interesting vertical, because we are agnostic, we could kind of look into those new verticals as well. So that is what we plan to do. We are very aggressive in our growth strategy. We believe in profitability, not just the growth part of it. So those numbers which reflect, we plan to kind of do both through M&A as well as organic growth. Organically, we've been growing at about 30 to 40% year over year over the last 3-4 years. So we expect to have the same trend moving forward, as well as we also expect to kind of grow, with M&A. And it's good with the public currency that we have now. It makes M&A much easier. Very interesting because we've been talking to a bunch of targets which are all non-binding. So I can disclose at this point in time, they're willing to come at an all-stock deal, given that we are a profitable company. So that would make very interesting kind of aspect for us to kind of grow the company both through organically as well as inorganically.
Correct. Well said. And can you just explain to us what the go-to-market strategy is? Like, what are the initial target markets or sectors that you're focusing on, or is it just widespread?
So the markets that we are currently focusing on, a majority of it is Australia, India, and UK at this point. In the drone space and in the ag tech space, one of the reasons that initially we did not focus on the US market was also because post 9/11, the regulations are very stringent in the US. But we are tying up with certain agencies and certain companies here which already have approval. So our plan is to kind of not have to go through the whole regulatory things ourselves, but look at acquiring companies which already have regulatory approvals so we can expand our footprint in the US as well in the ag tech space. The same thing we're doing in the prop tech space as well. The energy part of it, the comparison is not huge, but in other utilities, we can expand. So we've had, we've started that process. We've had, discussions with really large residential holding companies. We are also, looking at tying up with companies which are focused in the space and then grow the prop tech thing here. With respect to agentic AI, in the customer experience space, we already have, we're looking at contracts, sizable contracts in Australia and US. So generally, these are the markets that we are looking for with our go-to-market strategy.
Right. And I'd just like to end by asking if you can sum up the value proposition for investors who might be looking into this sector for investing.
Yeah, I think, Braiin is a great company. We are not all blue skies. We actually generate revenues. We are profitable. We have operating cash flow. We have a very aggressive leadership team which believes in growth. The good part of it is, unlike other companies, we have voluntarily kind of locked ourselves up, all the promoters and founders, for a year. So, we believe in this company. We're not here to exit. We're here to grow. And I think we think that, this is a great, great company to kind of invest into because we expect the growth to be phenomenal over the next 3 to 5 years.
Great. With that, we're at time. So I would like to thank you very much for sharing your story with us. And also, I'd like to thank everybody in the audience for listening and spending time with us today. Thank you so much. Have a great day.
Thank you so much. Thank you, everyone, for the time, and really appreciate you giving me the opportunity to kind of tell our story. Have a wonderful day.